Good morning, everyone, and welcome to this morning's webinar of Ask the Accountant. Thank you so much for your patience. We were just giving a few moments to let everyone join in, so thank you so much. My name is Bo and I'm talking to you from PMW Plus. Today we're going to be talking about the economic response to coronavirus and what it means for your business. Just a special shout out to Regional Development Australia, Central West. Thank you so much for organising this. I just would ask, before we do get started, could you just confirm that everyone can hear me okay? Just if you pop in the chat section, that you can hear me okay, that would be wonderful. Thank you so much, Sam. Thank you, Faye. Thank you, everyone. Okay, so. Hello, wonderful. Thank you, everyone. All right. For those of you, the way this is going to work is we're going to go through the presentation and then at the end we're going to have some Q&A. But if you've got some questions that you'd like to ask or that just pop into your head, feel free to pop them into the chat section and we'll make sure that they're answered when it's time to do the Q&A. So just a little bit about who's speaking today. My name is Bo. As I said, I'm from PMW Plus. We are a accounting and financial services firm that can help you with everything from bookkeeping to strategic advice, financing, wealth management. And Weston Ryan is the principal here at PMW Plus, and he's going to really be taking you through everything. Now, just a friendly reminder, if you do have any questions, please feel free to pop them in the chat section and we'll make sure they're answered. And Weston, are you there? Can you hear us?
Yeah, I'm here, Bo, and can hear.
Wonderful. Thank you so much, Weston. So I'm just going to hand things over to you now.
Okay, thanks, Bo, and thanks everyone that's joined us, and thank you to Sam and the RDA Central West team for the invitation to speak and setting up this webinar. Things have been happening so quickly over the last few months, it's refreshing to actually stop for a breather and reflect on what's happened.
Absolutely.
Confronted with hardship, some have faced tragedy, but regardless of how you've been affected, you have been affected in some way. What's fantastic is how well so many people have adapted to everything that's been thrown up at them. That we hear people hate change, and after seeing how people have responded to all these changes and how we've had to cope with it, I don't think change is the issue. I think it's uncertainty. So the important thing about that is we've actually learnt to change really quickly, the way we work, the way we communicate, the way we take out the garbage if you watch social media, just the way we're coping. And I think it's really important to remember how that was achieved. Like after all this is gone, recognise that we can change quickly and implement change quickly and effectively, provided we find out what's really important to the people we're asking to change and provide certainty around those things. Maybe we should change the name of change management to uncertainty management. Another thing that is obvious to me is that people have learned to assess risk and opportunity really quickly and act decisively in these circumstances. And that's a really valuable experience that I hope people retain when we move back to normality. The thing we have to add to that is we have to monitor that and to reflect and adjust what we're doing. And I suppose that's where today's webinar comes in. So in this webinar, we stand back, look at the major economic support and stimulus programs and review whether you've missed anything or whether you've taken best advantage of the opportunities. It's not all old news though, as we get our heads around the JobKeeper package, which has been continuously evolving since it was announced. So before we get into the talk, I'll just give you the reminder that we put on all our PMW Plus tax advice. What we provide is an opinion. It's an opinion on our interpretation of the new laws. And it could be that other opinions emerge which are different to ours. That said, the information that we've collated has come from Parliament, it's come from the Treasury, and it's come from ATO sources. So I really don't expect much divergence of opinion from the people that matter. Be aware that many of the things we cover are changing continuously, so try to keep yourselves in the loop and make sure you're dealing with the most current information when you're making decisions. So what we will cover today is a run through the major federal and state support packages. We'll look specifically at JobKeeper and the apprentice subsidy. We'll have a quick look at the New South Wales initiatives that have been, a lot of people from our client base have taken great advantage of. We'll line you up with some coronavirus resources, and we'll stick around for some questions and answers at the end. We'll now move into the initiatives for small business, and we'll kick off by looking at the federal government packages available. And we've put those into three classes. We've looked at cash incentives that have been delivered, tax incentives, and then some other ones that sort of have probably fallen off a little bit, but are really important. The first one from the federal government is the cash flow boost, and hopefully most businesses will be up to speed with this one. At the moment, the highest priority for any business is being on top of your cash flow, and this one is a really important injection into many businesses. If you've lodged your BAS, you've probably already received your first entitlement, either as a reduction in your BAS or a cash injection. And there'll be more to come depending on how you lodge your BASs. So while many businesses have received their initial payment, it's largely automatic. There's some that the ATO wouldn't have known about. The eligibility criteria is that your business must have turnover of less than 50 million. Most of us don't have too many problems getting under that threshold. We have to make payments subject to PAYG withholding rules. Basically, that just means wages. Even if you didn't have to withhold any tax from those wages. And we should have provided appropriate evidence to the ATO that you've made taxable supplies. You've actually sold goods or provided services in the period from the 1st of July 2018 or in periods ending before the 12th of March. So that means lodge the BAS up to the 31st of December 2019 or the 20th of February 2020 if you're a BAS, if you're a monthly lodger. Now, typically that means you've either lodged your 2019 tax return or a BAS for those periods, but there are exceptions, like businesses that commenced in the 2019 financial year. They're not registered for GST because their turnover is under 75,000 or projected to be under 75,000, and you haven't lodged a tax return because you lodged through a registered tax agent and they have a deferred lodgement program and you're allowed to lodge later.
Weston, I'm so sorry to interrupt you. We're just getting some comments through that we're having a little bit of trouble hearing you. So would you mind just speaking closer to the microphone or turning your mic up? That would be wonderful.
How's that, Bo? Is that any better? Or?
That sounds much better. Thank you.
Okay, so the point I was making is that people that haven't received anything in their BAS because they haven't lodged can still go to the tax office portal or they can see their tax agent and prove to the commissioner that they were in business and had made taxable supplies before the 12th of March. So it's not all done and dusted, you haven't necessarily lost it. The second scheme, which I'll talk about separately later, is supporting apprentices and trainees. So I think is a ripper. Small business employers, those with fewer than 20 employees, can get 50% of the wages paid to apprentices and trainees, up to $21,000, from the 1st of January 2020 till the 30th of September 2020. But it's $7,000 per apprentice or trainee per quarter. The apprentice has to have been employed in one of those businesses as at the 1st of March 2020. But that goes longer than JobKeeper, for instance. That actually comes in from January rather than from April. Again, we'll talk about that later. And the main one that I'll talk about today is the JobKeeper payment. We'll do that separately as well. But they're the cash incentives from the federal government. There's also some tax savers. The first is the instant asset write-off, which allows businesses with an annual turnover of up to 500 million to write off depreciable plant and equipment acquired between 12th of March, when all this started, 2020, through to the 30th of June 2020. This currently we had a threshold for small businesses, and that went up to 50 million turnover, of $30,000 for individual assets, and now that's bumped up to 150,000. Now, in the absence of any further announcements from the government, this threshold will revert from 150,000 down to $1,000 on the 1st of July. So it's a big jump. There's a big deduction there if you can bring forward expenditure into this year. If your plant and equipment at the start of the year is under 30,000, you can write off the whole lot in the 2020 year. That's another thing that we should be considering. A lot of people will be saying, are you kidding? The last thing I'm looking for this year is deductions. But if you've paid instalments of tax already, this could be a way to claw them back in your BASs, claw back instalment by varying down, and not have to find them again later in the year when the balance of your, late next year actually, when the balance of your 2020 tax will fall due for most people. So the tactic here is to set your business up so that when the situation does turn, you're geared up to take advantage in a more competitive way with better equipment, better efficiencies, and a more resilient business model. So if you can get into those assets, then there could be great advantage in doing so. Along the same lines is an accelerated depreciation for new plant. So the previous one I spoke about, the 150, could be new or used. This one is for new plant. That's acquired from the 12th of March 2020 until the 30th of June 2021. So if up until the end of this year, if it costs less than 150, you'll write it off immediately. But after this year, for another year, you'll be able to use an accelerated rate for depreciation. Now, I'm tempted to say the accelerated rate is 50% more in the first year, but that's a bit misleading. I'll just give you an example. Say you're a farmer, your turnover's under 10 million, so you're a small business taxpayer, and you access the small business general tools when you're claiming your capital allowance. So in normal terms, that just means you throw all your assets into a big pool and you depreciate them together. If you're doing it under that, you buy and collect a new tractor for 200,000, so over 150 net of GST. Normally in the first year, the rate to write that asset off and the deduction you get is 15% of the cost of the asset. This year and next year, you write off 50% of the cost of the asset, so that's 100,000, plus 15% of the written down value, the remaining 100,000. So you get another 15%. So you pay 200,000 and you get a deduction in the first year of 115,000. In a normal year, that deduction would be 30,000 in the first year. So you can see where we're going with that. Fitting into that, we'll have a look at the other federal programs that are in place. And this one might help you out in acquiring those assets if necessary. So there's a federal government guarantee of up to 50% of the borrowing by small business up to a limit of 250,000. So what this should do, so the government's actually stepping behind you as a guarantor for 50% of the amount borrowed up to 250,000. So this should encourage the banks to free up capital and lend money to small businesses and or make those borrowings less risky to them, and it really should make it cheaper to the borrower for you. I haven't seen how the banks are responding to this program. They've also been bullied a bit by the government in helping fund JobKeeper payments, which they have really stepped up for. But those loans are for small amounts and for short terms. These ones are large amounts, longer term. Whether the extra risk is offset by the government guarantee is a question for the banks. Inevitably, though, loan applications have to commercially stack up. So this program gives the banks an opportunity to lend on the strength of the business rather than on straight asset backing, principally on asset backing. If they get into the habit of that could change the way banks assess small businesses going forward. And could be a fantastic outcome and probably worth more than the 40 million the government's pledged to put into the package. If it's likely you'll be looking at extra liquidity and borrowing for it, I'd probably be looking at using your stronger trading figures now, assuming that you've taken a hit during this period. It's probably better to go in earlier using stronger figures than waiting until later when you need the funds and the figures don't really support the application as well. So again, it goes back to that constant message that I've been putting through, that your cash flow is so important at the moment. We've got a software at PNW Plus called PNW Insight that we use for cash flow forecasting and doing what-if analysis for our clients. It's a really good communication tool that presents not only numbers and tables and things, but it converts to graphs very easily and makes the figures more accessible and a lot less scary for non-accountants and some bankers actually. It's a good program for supporting business loans. And the final piece in the jigsaw of these federal government initiatives is the relief for financially distressed businesses. This initiative hasn't received a lot of publicity, but it's a really important factor for business owners to be aware of. I've only just mentioned how important it is to control your cash flow, but right now there's so much uncertainty, it can be really difficult to predict how things are going to turn out. You might be able to continue operating and you might be doing quite well, but what if one of your major clients is adversely affected and doesn't pay you in accordance with the terms, or doesn't pay you at all? Or one of your suppliers leaves you in the lurch with commitments to fulfil which carry penalties if you don't meet contractual terms. It's hard enough to watch your own business, but it's just as crucial to watch everyone else's. Long story short, your cash flow doesn't emerge as expected and you're travelling very close to insolvent trading, which means you can't pay your debts, you can't meet your debts as and when they fall due. Now, to provide a bit of breathing space, the government's temporarily changed the thresholds and response time for business owners facing this situation. So instead of being able to issue demands for debts of $2,000 to $5,000, depending on the circumstances, the threshold for creditors that they can issue a demand for is increased to $20,000. And for the debtors to respond to that demand, instead of having 21 days, you now have 6 months to respond. So it does build in that breathing space. Now remember, this protection is only in relation to debts incurred in this period, but it is an important initiative.
Weston, I'm so sorry, I'm just going to stop you there. Would you mind switching over your communication method through your phone? We're just having a bit of a hard time hearing you.
Sure, okay.
That last minute.
If you can tap dance for a little while, Bo.
Yes, certainly. Thank you, everyone, and I'm sorry about this. We did run a test earlier. Weston's based just a little bit out of town, and you know, sometimes his connection can drop in and out, but usually his phone is pretty solid. So we shouldn't be one moment longer, and he'll be back on. So thank you very much for your patience. So we are going to move on soon to discussing the New South Wales state initiatives. So bear with us, and we will be moving forward. Now, if you've got any questions or anything in the meantime, maybe just have a think and enter them into the chat box so we can answer them when we get to our Q&A session. Oh, thank you, Gordon. Thank you for letting us know that you can hear fine. Sorry, we were just getting some private messages through saying that there was a bit of an issue. Thank you, but we shouldn't be too much longer. Again, thank you everyone for taking the time this morning to join us. Oh, thank you, Faye. I'm glad you can hear me. But yes, I have gotten a few comments saying that there was a bit of a issue with the volume. So thank you all for waiting so patiently. It shouldn't be too much longer. Just We've had to do this once before. But typically his computer's worked okay. Thank you to everyone who's letting me know that they could hear us okay, or having problems. We want to make sure that the experience is perfect for everyone and we can all hear just fine. So thank you again. Thank you again for your patience. All right, I think we have Weston back on the line. Weston, can you hear us okay? Oh, and I'm just playing with the screen. Isn't that fun? Weston, can you hear us?
I can.
Ah, there you are. Wonderful. That's much clearer. Thank you.
Okay. Now, where were we up to? We're just coming into the state initiatives, aren't we?
We are, certainly.
So I'll move these out. This screen for me, I'm operating on a phone, so it's very small, so I could be out of order a little bit here. Bear with me.
I'm following along with you, Weston.
So moving on to the New South Wales state initiatives, employers with payrolls under 10 million annually have had their payroll tax waived for the last 3 months of the year. Or their payments are waived, so they don't have to make the payments. And then there's a 25% reduction in their annual reconciliation. So most employers that this affects will be familiar with this now, and they will have seen it in their March and April payroll tax returns. Just a reminder that you still need to lodge those monthly payroll tax returns and your annual reconciliation. You simply don't have to pay. Now, at the end of the financial year, you submit your annual reconciliation and reduce it by 25%. There may still be some payment due on the annual reconciliation. However, that payment and payments for July to September have also been deferred until October 2020. Now, I think we'll hear more from the state government about what they're going to do with that in September 2020, but it seems like you either pay in October or they will allow people to have payment arrangements after that period, but you'll probably have to apply for those. So all employers paying payroll tax in New South Wales, regardless of the size of the payroll, can defer payments until October 2020. The New South Wales government's also brought forward an increase in the minimum payroll on which you pay payroll tax. There's a lot of payrolls in there. It's taken it up to $1 million. So from the 900,000 we're currently in, they're promoting it as a saving of $5,450 a year. They'd already had said it was going to go up, so I suspect that saving's more like $2,725, but let's not quibble. One incentive that's been really popular and hitting small business who often don't care about payroll tax because they never pay it is the New South Wales State Government Small Business COVID-19 Support Grant. Now, you'll have to be quick to get into this one because applications for grants are open until the 1st of June 2020. They're open to businesses highly impacted from the pandemic, so you need to have had a drop in your business activity by 75% over 2 weeks during the COVID period, and that grant is up to $10,000. And that's to defray expenses that are still coming in even though your business has dropped off significantly. Now, we've had a lot of clients that have applied for this. The grants are being processed quickly and the money is actually coming in quite quickly. So the eligibility criteria is the business owners and not-for-profits must have under 20 employees, so 1 to 19 employees, and an annual turnover of more than $75,000. So that means you're registered for GST typically. You're not paying payroll tax, so you have to have a wage bill under 900,000, which is the current threshold in the 2020 year. You've got to have an ABN and be based in New South Wales. and you've got to be highly impacted. So this means a 75% reduction in turnover compared to an equivalent period of at least 2 weeks in 2019. And you've got to have unavoidable costs that aren't subject to other financial assistance measures. But there's plenty of those. Particularly for people in Orange, because when this was announced in April, Food Week was called off, and that's normally, like a fantastic trading period, particularly for these industries that it's targeted at. Normal trade was just disrupted in one of the busiest periods of the year. So I think businesses from Orange, particularly hospitality industry, should be looking hard at this grant if they haven't done it already. New South Wales also offered a residential and commercial property relief package. It's based on sharing the load by freeing up landlord expenses in exchange for a freeze on evictions. It's pretty complicated. It's really based on negotiations between the landlord and the tenant. And most of the benefit for the landlord is land tax, which if you're not paying land tax, doesn't do you a lot of good, doesn't help you out much. So that sort of really comes down to the goodwill between the tenant and the landlord negotiating. So we've tried to make these, what we've covered here today quite comprehensive, but keep an eye out because there's a lot of programs, some regional and some industry-specific initiatives that might apply to you. If you don't follow RDA on social media like LinkedIn, I highly recommend you do. You'll see a lot of opportunities, a lot of information coming through. They have really good posts and they're really relevant to people that live in this region. That's my plug for RDA, Sam, but it's true. So we'll move on to JobKeeper. And the JobKeeper is the $30 billion scheme that's the cornerstone of the federal government's coronavirus response. 30 billion, in case you didn't know, is a 13 with 10 noughts following it. It's a lot of money. The JobKeeper payment, it's a payment made to eligible businesses by the federal government to subsidise or even supplement payments by the businesses to eligible employees and eligible business participants on their books from 1st of April through till 30th of September by paying $1,500 per employee or business participant per fortnight. To be eligible, most businesses had to have a fall in GST turnover by 30% compared to an equivalent reporting period in the prior year. So your April turnover is 30% less. April 2020 turnover is 30% less than your April 2019 turnover, for example. Now, I think businesses that were eligible under the basic test knew that fairly early. Some have actually received their first payments for JobKeeper. But I'm concerned that people sort of got fatigued when all this information was coming out. New information was hitting, podcasts and email boxes every day. JobKeeper was announced in the middle of April, and there were updates on info guides hitting the ATO site on 14 April, 16 April, 17, 18, 20, April 21, 22, 23, 24, 25. I could go on. Like that's how consistently and continuously this has been changing. And I just think that some businesses may have failed to realise that the scope of eligible businesses was expanded. Qualification criteria have been extended so that the choice to come into the program and the payment dates were extended. And eligible employees were adjusted to exclude some minors, the under 18s that were dependent or in full-time study. And the amounts that could be received in respect of an owner or a non-employee beneficiary, say, involved in the business that I've referred to eligible business participant. So importantly, the eligible business participants, they're the people that are involved in the business, but they're not employees, they don't draw a wage. Could be a sole practitioner, could be a partner. They actually can come into the program and the business is paid $1,500 for one eligible business participant per fortnight. So not everyone gets the payment, but you can nominate one person and the business gets paid $1,500 to support that person each fortnight. So the big changes that have occurred since the JobKeeper was announced is the registration date was extended to 31st May 2020. So you could still be coming into it. The payment of employees to come into the first period for the April month was extended to the 8th of May. There was the inclusion of the eligible business participants, like I mentioned. There was the carve out of the under 18-year-olds who are dependents or full-time studying that I mentioned. And importantly, there were changes to the Fair Work Act that provided employers with a lot more flexibility than in what they could reasonably ask their employees. So when they were first announced, we didn't have these Fair Work changes, and there was a lot of people, a lot of employers that were probably breaching the Fair Work Act until this came in. And it's something we need to keep top of mind when we're asking employees to change what they're doing. Now, eligible employers for the purposes, for our purpose, whose business employs staff and whose turnover's dropped, had to choose to be part of the scheme. There's a number of situations in which some of the businesses didn't have a comparable period for the prior year. And these tests, we got told at the start that there would be alternative tests, and we didn't know what they were. The alternative tests were announced later, and I think this is where people probably dropped off the scheme that could well be eligible. Now, you can use the eligible tests, the alternative tests, if your business commenced within 12 months. So if you started up and you didn't have a comparable period from 12 months earlier, then instead of using that month 12 months earlier, you use an average monthly GST turnover as your comparative. Businesses that acquired of a business or disposed of business that changed their turnover within 12 months, that could have an impact on them. So they might have had their business was trucking along with a turnover of $100. They actually purchased a new business, and then when they came to measure April this year, that business had dropped off significantly, but not compared to last year. So they've looked at that situation if you've acquired a business or you had a business restructure changing, which caused a change in turnover in the last 12 months. One that I've seen with a few clients is where the business has had a substantial increase in turnover over 12 months. Now that means 50% increase in turnover over 12 months, or the equivalent over 6 or 3 months. So 25% over 6 months or 12.5% over 3 months, but it's the same trajectory. In those cases, we use the current GST turnover or a 3-month GST turnover divided by 3 to give us a comparative. Other businesses that could be affected are those affected by drought or natural disaster, or if you're a sole trader or a small partnership and you don't have employees and you've been sick or injured or on leave in that period, that's going to affect your turnover, obviously. You can get in using an alternative test. Businesses that have got an irregular turnover, not cyclical but irregular, that's another one that comes into it. So it's not compulsory to be part of the JobKeeper scheme, but if you do qualify and choose to access the scheme, you've got to offer participation in the scheme to all your eligible employees. So you keep them on as employee, you get subsidised to pay their wages for doing that, and the wages are a minimum of $1,500. Now, in order to determine whether your turnover has dropped by 30%, you need to compare your GST turnover with that of a prior period. Just so that you know, GST turnover, it's like the supplies that you report in your activity statement. It excludes input tax supplies, that'd be residential rent, for example, or interest and dividends. But it includes most of your business supplies. Doesn't matter whether you report monthly or quarterly, you can use either method. You can, if you report quarterly on your BASs, you can go back and compare months to months in the prior periods or your comparative period. That's not a problem. And we see that can work both ways. So if you're monthly, you can use quarterly results. Quarterly, you can use monthly. And that could potentially get people into the scheme a bit earlier than first anticipated. So maybe their income didn't drop off initially, but then did drop off in the later months of a quarter. If you use the quarter, that might get you into April, or now May, if you haven't made your payments, of $1,500 payment in April. It's the direct employer of the staff that's entitled to the JobKeeper payment. So if you've structured in a way that sort of separates your labour, you need to look at the labour hire firm, particularly if it's internal. I'm not going to go too much into eligible employees. You've got nomination forms for that. You should have those. So just to explain quickly the way it works, the payments are made to the employer monthly in arrears by the ATO. So employers receive $1,500 per fortnight. The employers can top that up. If the employee receives more than $1,500 per fortnight before tax, they'll continue to receive their regular income, and the JobKeeper will assist the employer to continue to operate by subsidising them. If an employee typically receives less than $1,500 per fortnight before tax, the employer must pay the employee a minimum of $1,500 per fortnight before tax, and it must be paid prior to the reimbursement. It's paid in the pay period, and then the tax office will pay you back afterwards. Superannuation is something that you really need to keep an eye on. You do pay superannuation on the $1,500. If the employee would normally be receiving less than that, it's the choice of the employer whether they take it, whether they pay the compulsory superannuation on the full $1,500 or the normal payment to that employee. But make sure you are paying your superannuation guarantee payments throughout this period. And I suppose that brings me to my next point, and that's the ATO are going to be policing these payments. So even though the payments are coming thick and fast now, while we're in the middle of it all this, they are going to come back and make sure that people were entitled to the payments. And they've published guidance on what the Commissioner tells his staff on what to focus on and what not to focus on. Typically, they're not going to devote resources to these matters. And devote resources is a euphemism what the ATO uses for reviewing or auditing clients. But they will make an exception where people manipulate their data to fall into the scheme or register entities improperly. So there will be an eye on this. It's really important that you keep records on the data on which the decisions were based. So you need to compile evidence about your participation in the scheme, tuck it away in anticipation of the question. I know at PMW Plus we carry an insurance policy which clients can join into, which covers the cost of ATO reviews and audits and includes things like JobKeeper. So that means that our clients aren't going to be hit with costs of supporting them during an ATO review or audit. So we'll move on to the trainees and apprentices. And under this scheme, small employers, under 20 employees, can get 50% of the wages paid to apprentices and trainees up to $21,000 per apprentice and employee for the period from January 2020 to 30 September 2020. So it's paid quarterly. There's $7,000 per apprentice or trainee per quarter. The apprentice had to be employed at the 1st of March 2020. Now, if the employer is benefiting from the JobKeeper scheme, they can't also pick up benefits under the scheme, but that would exclude, so the first quarter, 1st of January 2020, 30 March, where JobKeeper wasn't in, employers can still benefit for the scheme for that quarter. The scheme moves with the apprentice. If the apprentice changes work from that person that they're employed with at 1 March 2020, then the subsidy moves with them to the new employer, which could be something to keep your eye on if you're employing apprentices. And that could happen. They could be out of JobKeeper if that happened after the 12th of March. So that's another way to actually keep up some of these subsidies. I mentioned before the New South Wales State Government Small Business Grant. Yeah, as I said, you've got probably a couple of weeks to get into that. The grant period closes on the 1st of June. It's worth $10,000 and it's open to industries highly impacted from the pandemic. So with JobKeeper, we're looking at a drop of income of 30% over a month. For this grant, we're looking at a drop of more than 75%, I should say, in 2 weeks. So we're comparing equivalent periods between 2020 and 2019. I'd really encourage people to go into that. We've put in a lot of applications for these grants for our clients that are properly affected because of this. And like I said, Orange is a regional centre that was hit pretty hard, and particularly over that food week period when you compare it to last year. So people should really be looking at that. Highly impacted businesses include retail trade, clearly, accommodation and food services, rental hiring, real estate services, administration and support, arts and recreation have all come into that. Again, this grant probably favours big cities a bit. Because I think a lot of the regionals, apart from like special things like Food Week, have been pretty much affected by drought and didn't have great figures in 2019. So a 75% in reduction almost means, you know, you're out of business in any case. I also mentioned the residential and commercial property relief package from the New South Wales government. This was done together with the federal government, and the federal government set out a code of conduct for landlords and tenants. So it's based on sharing the load, freeing up landlord expenses through land tax in exchange for them putting a 6-month freeze on evictions. I'm not sure how this is running. I don't think too many people up here are too incentivised by the benefits, but there's still from what I gather, most people are negotiating and trying to keep their tenants.
Okay, thank you so much, Weston. We're going to move on now to time to ask the accountant. So it's time to ask some questions. But before we start answering questions, I just want to say again, thank you to those who have joined us this morning. RDA will be sending out a survey later today or this evening just to get your feedback on today's presentation. We'd love to know your thoughts. Okay, Weston, was there anything further you wanted to add before we start answering some questions?
No, I don't think so, other than to thank RDA and to encourage people to use the resources that they offer us. I think you put up the links on the slide, so I didn't notice those going through, but those links, I know our website's got a massive material, thanks to Bo. I suppose if there's not a lot of questions coming through, I just remind people about that cash boost, and if they didn't qualify initially because they didn't have the evidence, your tax returns or your BAS is lodged, you can use other evidence through the business portal or through your agent. That sort of evidence might be records from merchant facilities, tax invoices. You've got your structures set up and they were done in time. Bank statements in the business name. If you've got permits for building use or selling food or storage of dangerous goods, all those things are pointing to a business going on, and taxable supplies.
Fantastic. Excellent.
Yeah.
We do have a few questions coming through.
Yeah.
The first question from Faye is about the Facebook Small Business Grant. We didn't talk too much on that, Faye, apologies. That is just to highlight some of the options outside of the government of businesses giving back or trying to support small businesses. So Facebook it's a global announcement, so they've put 30 million aside to help small businesses in countries all over the world. You can just go to the Facebook COVID business site and you can apply for the small grant, but it is being spread over the world. So we're not sure how much Australia is actually going to get, but look, it's always worth, looking into these things to see what support you can get.
Yeah, Bo, I think the amount it's typically about $5,000 and they pay it in cash and advertising. So I think that means Facebook advertising. And, I think it's great that they're doing it, but I'd be careful about what information you're putting in front of Facebook. So,
yes. Okay, our next question. What is the date criteria to prove the 75% drop in turnover 2020 compared to 2019?
So could you just repeat that first part of the question?
Certainly. What is the date criteria to prove 75% drop in turnover in 2020 compared to 2019?
I think that it could be, I'm not sure off the top of my head, but it'd be going from the end of March through till that June period. So you've only got to pick 2 weeks and show a 75% drop in turnover.
Great.
Within that period.
Perfect. When assessing the decline in turnover with JobKeeper, do we analyse turnover on the same basis as our BAS reporting? For example, if we report BAS on a cash basis, we have to assess turnover on cash basis, or can we assess on accrual basis?
Oh, what a great question. That's actually a question that was put to the Commissioner, and they've said that they normally expect you to use the same, but if a cash business measures on an accruals basis, which is probably the more accurate accounting measure, they'll accept that. They'll get a bit, they might have a second look if you're going from accruals back to cash. So if you're doing it cash, that's a choice that you make under tax law, and really the correct or the proper accounting treatment would be on accrual. So they'll accept you going that way. Otherwise, you'd need to have a good reason to go the other way, to go, if you're an accruals reporter and you go back and measure on cash, you'd need to explain why you've done that. Or need to be able to if they ask you.
Question from Paula. Do you have to exhibit a downturn in cash flow to qualify for the cash flow support too, same as the business support grant?
Sorry, do you have to
exhibit a downturn in cash flow to qualify for the cash flow support too?
The New South Wales grant? Yeah, it's a turnover, but it's only a 2-week period, so it's a fairly limited one. Be careful of people sort of manipulating their figures to fit into these, but yeah, two weeks is the period for the $10,000 cash flow grant. You do have to be able to show it, but you may not be called on to show it.
Okay. Are there any other questions from anyone listening in? Sam, thank you so much for sharing that information. Just about COSBA has announced 67 $10,000 grants for impacted businesses, funds for small businesses to revive and thrive. That's brilliant. So the link is there. Thank you, Sam. It looks like it closes Monday, 1st of June. Applications close. Well, thank you very much, Gordon, for your feedback. That's wonderful. Are there any further questions before we wrap things up? Or anything you'd like us to go over again or in more detail, or even if you've got a particular situation that you'd like us to discuss with you. No?
I know I should actually congratulate my dogs for keeping quiet for an hour. It's about the first time since this lockdown that that's happened.
This is the first presentation where my 3-year-old hasn't burst through the door. Thank you, everyone, for joining us. Thank you to those who listen. And look, if you do have any questions or you'd like to contact us, we do have some coronavirus resources available. There's plenty listed on the RDA website. PMW Plus website has a page dedicated to COVID resources. Of course, there's the Australian Government of the ATO page, and Service New South Wales has further information. RDA will be posting this webinar on their Facebook page and website, so if this is too much information for you to digest initially, you can go back and rewatch, and you can even access the slides if you like, where those links will be available. So thank you, everyone else, and watch out for that email coming through from RDA. It's just a survey on today's webinar. We'd really appreciate your feedback. Thank you so much to everyone, and have a wonderful day. Thank you, Weston.
Thanks, Bob. Thanks, everyone.